Hello friends and welcome to my YouTube channel Simply Talks, and today I'm going to talk about Metropolis Healthcare, what lies ahead for the company and whether the business will continue to shine going forward. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking it any decision on my call to do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Metropolis Healthcare, small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And if you can pay $100 upfront, then you get 1 year access by paying for 10 months. So that's a 20% discount on your yearly fee. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now, about the company established in 2006, Metropolis provides medical testing services, one of the fastest growing lab brand. So, two or three large lab brands that are listed currently, 4,500 employees and 125 centers across India, and is growing very fast. Present across India and seven other countries as well. So, present abroad as well, and it will benefit with the lifestyle change that is currently taking place. The market cap is around 16-17 thousand crores, so it has just risen from 14-15 thousand crores when I made the presentation. So it is a smaller company in this domain that could become big over a period of time. If you look at the numbers, then these are financials for the Q4. So sales have grown by around 41%, and these are Q4 FY21 versus FY20. So the March quarter numbers that I'm talking about. Profit has quadrupled to 61 crores from 15 crores, as totally zero debt company, and that's why the stock has surged from 700-800 rupees all the way to 3,000. Strong dividend payout, strong you can say dividend pay this company is. There's high promoter and institutional holding with only 6% free float, and that is also a huge positive. The return on equity is close to 28%, operating profit margin of 27%. Shows the kind of operational efficiency that the company is showing and the robustness in terms of numbers. If you look at the performance, then over the last 12 months, it has doubled in less than a year. The stock has done extremely well. Operationally, the efficiency has shown through, and the company has done exceedingly well, and results have been robust. It is just that the valuations are slightly stretched, and the stock price has risen a lot compared to probably where the valuation is. But I think what is happening in the market currently is whatever is becoming expensive is becoming even more expensive. Strong promoter and institutional holding is a positive. No debt is a huge positive, and return ratios are very strong. I mean, 28-29% is like a consumer stock that we are talking about now. 34% of pledging of shares, now that is a cause for concern, but it is going down from a high level earlier. So it would be beneficial for all stakeholders and shareholders if the pledge shares come down below 10%, closer to 5% or less than that. But the current health situation has helped the numbers. There is no doubt about it. So the numbers may peak out over the next 6 months. So that is one thing that you need to be aware of, that once the pandemic ends or goes through the third wave and that ends, then after that numbers may not be the same as we are seeing currently. So the stock may correct from FY23 onwards. So that is the thing, but over a 4 or 5 year period, it's a good stock to be in, but you need to wait for corrections. If you look at the technicals of the stock, then there is strong support around the 2700 levels. Currently at 2900 to 3000 levels. 2700 to 2650, very strong supports. It is looking like it is on a verge of a major breakout. Once it takes out 3060, we are looking at 3300 and then 3600 in 6 months' time. But what you need to do is buy on major declines, as something like say 2500, 2600. If you get it, that's where to start accumulating rather than buying currently, because you never know when the tide would turn around. So what needs to be done? In my opinion, it can be bought on major declines at 22500, as I explained. Wait for a market decline to get into rather than just buying at these levels. Will be in focus as people's habits will change. So what will happen is, even after the pandemic ends, there will be more people going for lab testing. There'll be more people that will be worried about their health. So eventually the numbers permanently have changed. So permanently, what will happen over a long period of time, the numbers will continue to gather pace. Although for FY23 the numbers could be down compared to FY20 and 21. So you need to have 21 and 22. So you need to have that into perspective. If you have a 4 or 5 year time frame, then you can start accumulating from those 2500 levels. So this was my video on Metropolis. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.